This is Michael Fox, and this is the Prospector News Podcast. And I have joining me today the silver guru, David Morgan. Welcome, David.
Michael, it's great to be with you. Thank you.
I'm very excited to have you on today. I've been watching the gold and the silver markets lately. Silver even more so than gold, but they've been on a bit of a tear.
Yes, they have. If you look at the last 30 days of trading on silver, we've had a high of around 25.20 and a low of about 22.25. So between just looking at the last 30 days, we were in a tight channel formation trading between 22.50 and 23. Once it broke above 23, it shot up to 25 and has stayed around that 25 level for what, 1, 2, 3, 4, 5, 6 trading days. Starting to back off a little bit now. It's far exceeded gold in percentage terms during the same time frame. They both broke out around the 10th of July, and gold went from 1920 to 1980. It's currently around 1960. So on a percentage basis terms, again, silver outperformed. And we know that from the gold silver ratio. It's gone from above 80 to under 80 recently.
Yeah. Seasonality should suggest that we shouldn't be seeing this right now. So, every time, you take a look and say, okay, why is it different this year?
Yeah, that's a good one, Michael. I mean, seasonalities are a tool and they are not totally reliable. In other words, it's 80% of the time or whatever the seasonality holds, and then there's that 20% it doesn't. So in the case of the metals, as you just said, we call it the summer doldrums. It was usually attributed to lower volumes due to the Europeans trading less because they take these very long vacations. And that was the reason that was put forth for years and years and years. But I'm witness to, I think it was 2016, I have to check, but we went on a rally all the way up to September. And I'm very fond of saying the market knows more than anyone. Obviously, it could be irrational for long periods of time. We know that. But as far as the metals are concerned, so we are in a very nice rally, but unfortunately, I don't think it's going to last a lot longer. And I've got a number of reasons for that.
Well, let's start for the reason for the rally. What's triggered the gold and silver prices to spike up in this particular rally?
Whenever you ask the question why, it goes to intent, and it's a valid question. It's very difficult to truly answer truthfully, and I'll give you some ideas. But to really know why, you'd have to actually ask, like every trader, why are you buying? A lot of it would be algorithms. Again, when you're in a tight channel and you break to the upside, then the algos go green, 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 buy, buy, buy. So that's part of it. The other part is kind of a non-ceasing demand for silver through the industrial side, which you probably haven't seen this robust in quite some time. If you look at Matt Watson's work, who I'm friendly with, he does great analytical work on the demand and supply side of all kinds of metals, even the exotics like germanium and iridium and others like that. The point is that solar has really come to the fore this last few years, especially with the ESG and the green movement and oil issues and everything else. So the industrial component continues to be stronger and stronger as we march on in time.
Yeah, definitely. Now, you're saying that this rally is likely to run out of steam soon. So what are the catalysts that investors should be watching for to maybe ease themselves back out of the market again?
Yeah, the commitment of traders is quite reliable as far as trend changes. It's not that reliable for timing. So when we're at the position we're in silver right now, the COT is what I would call unfavorable, meaning it doesn't have much more upside price-wise. Now, I could be wrong. It could be somebody, and I've wished for this for years, Michael, but someone's on the sidelines, like a sovereign wealth fund or family office, or maybe there's a few 3 or 4 waiting, and it gets to this point because it's gotten here again and again and again. meaning that we're at the top, meaning that there isn't much more money to be put into the silver market. You've got the commercials net short a massive amount. The non-commercials are loaded long, public sitting there long, and that's usually a setup for a lower price in time. So right now I'm giving those numbers out. We're at 146,800 in open interest, which is kind of the top. The top is somewhere around 150 million ounces, 150 million contracts. We're within about 4,000 of that. So as far as I'm concerned, we're nearing the top. We're already seeing gold and silver both backing off from their recent highs. So that's number one. That's about the most reliable. Again, you can get an indication it's going to change direction, but not timing wise. And let's put a caveat in here, Michael. Before the ETFs were around, I wrote a booklet that was, I didn't charge a lot for trading, trading silver basis the COT. And believe it or not, and this is going back 15, 16 years ago, you could almost trade to the nickel based upon what the commitment of traders look like. It was that reliable, but things have changed with the ETFs. And it also was a little bit more accurate on timing. In other words, when you got to all money's in on the table, there's no more money coming in. That means we're going to reverse the trend. It happened quicker. But in the last several years with the LBMA, that's COMEX being actually used as delivery facilities, which really in the past, they weren't very much. Of course, metal moves in and out all the time, but not to the level that they are now. And then ETFs being used as a source of supply, which is really one of my points. I'll just make it now. You may come back and ask me again, but normally when you have a rally like we just saw, you would see, money go into the ETFs, the SLV, the PSLV, and you see more silver supply, physical come and go into those investments. Now, I haven't checked in the last couple of weeks, so maybe there's been some, but generally speaking, it's a discontinuity that we're seeing such little demand in the ETFs, whereas on the physical silver side for commercial bars via the COMEX, we don't have a robust demand. So it's almost as if, and it could be, that the ETFs supply are actually being eaten up by demand, and the players that normally are in that realm, like your sovereign wealth funds, your hedge funds, are basically staying out of that. It appears that way. And again, put a tinfoil hat on me. I mean, the facts are what they just outlined.
Yeah. So we alluded to a lot of the summer pressure as silver as an industrial metal. And this is a ponderance that I have begun to have as more and more silver is being required for our so-called green economy. Are we reaching a tipping point where silver, because it's always been a hybrid, it's part precious metal, it's part industrial metal, where are we starting to reach a tipping point where it's going to be considered more of an industrial metal than it is a precious metal?
Yes, I think so, for a variety of reasons. One is, if you just go back 20 years, go back 2 decades, the total industrial demand on the silver supply was 35% of them. Today, it's 55% of the market and increasing. In fact, based upon work of others and the Silver Institute, it looks like solar demand may take up to like 20% of the market. So if you take the 55, and right now it's currently around 12, so you add another 10, 65, 67, maybe 70% in the next few years, you've got industrial demand. So this is, that alone would give the argument that, well, it's more of an industrial. The other part is what's been done to silver and taken out of the monetary sphere. I mean, it was demonetized officially in 1873. It actually came back into monetization there somewhat thereafter. And we had silver coins in the United States up through 1964. From 1965 on, we didn't. But I think the most important point on this, and I'm being long-winded for a reason, but the other thing that happened some time ago, and I don't know when, I didn't have time to look it up for you, Michael, but the Silver Users Association came into being quite some time ago. And this was sort of an organization of silver users like Tiffany's, Kodak at the time. We don't use silver for photography like we did in 1999, but regardless, your big industrial users formed basically a cartel. And it's the only cartel to get together to make sure that silver's industrial capacity was met for the silver users. And of course, they have a big demand to make sure that the price stays at a reasonable to low price because they want high margins on whatever they're selling. You know, Kodak in the case of film, Tiffany's in the case of high-end silverware and silver products, I should say, the jewelry industry and all that. So that's sort of a background that silver has like a bias toward being pushed into the idea that it's only an industrial metal. But it's not true. It's both. And here's the kicker, and this is so obvious, it's like the nose on your face, but it actually took me a little bit of time to think it through, not eons. But if you look at a price of silver from the 13th century to present day, and you draw like a channel formation or you draw a horizontal line, the gold silver ratio never got above 20 for 1,000, 2,000, 3,000, 4,000, 4,500 years, basically. And it's only been in the last, well, since basically 1873, so 30 and 123, so 150 years, where it's been above 20. And why is that? And it's obvious the answer, and that is when gold and silver had the exact same function, which is money and only money, because you really didn't have silver in industry into the mid 1800s. There might have been mirrors, okay, you could call that an industrial thing. So there were uses of silver in industrial applications, but not much. For all practical purposes, the lion's share of silver was a monetary asset only. Once that's changed, then you got these huge ratios where you've been over 101, 100 a few times, up to 125 a few times. And that's because it's been decoupled from the monetary sphere. I did a lecture, you may recall, Michael, because I know we and I are at almost all the shows, but it was several years ago, and I said, what if silver were treated like gold? And the whole premise of that was the chart I just mentioned, and the fact that if silver were held as a monetary asset, just like gold is, and it had to maintain a ratio of, let's say, the monetary ratio of 16:1, there's not enough silver on the planet to make that happen. So there's a definite reason why the bankers have made sure that they've given a meme that silver is only an industrial metal, because if they can keep that in the consciousness of most people, and there's not enough demand for silver on an investment or monetary basis, they will eventually have a silver squeeze because industry will be vying for it. You'll have the solar industry vying with the electronics industry, vying with semiconductors, vying with silverware will be very small, 4% of the market, jewelry perhaps. But in theory, you could get to a point where just the industrial demand takes silver to a point where there's not enough of it. Now that's years out. That would be, a decade or so out. And that's, looking forward. I mean, looking forward, you have to give a forward-looking statement. It's based on blah, 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 blah. I really thought solar would take more demand than it did over the last decade. And where I didn't miss it entirely is it's called thrifting. In other words, how to get more, BTUs or more electricity out of any given ounce of silver. And that's been accomplished by a factor of about 400% over the last 20 years. But that's ending. In fact, the new panels, 80% of them, by the way, are going to use more silver per panel. And well, why? It's actually more efficient. In other words, the silver you're putting into the panel is going to produce a lot more electricity than the current ones. So there's a lot to the story. I probably elaborated a bit too much, but I want people to know the only way back to the silver, let's say, that we all want as investors, is for people to see it as a monetary asset, a safe haven asset. And really, it's pretty easy to do because it's such a small market, but it's an educational process. And you don't hear many people talking about silver as a monetary asset or needing to be a monetary asset again. But there is hope, and I'll hold it at a pretty high level, Michael, because we've got asset-backed digital currencies, ABDCs. And there's several out there that are gold and silver backed. And I think that will continue. And I think there'll be more and more people that come into the cryptos looking for asset-backed digital currencies. So the ABDC story is really just starting as far as I'm concerned.
So if you're a retail investor looking at the silver market now and looking to make comparisons, have we actually reached in the minds of, say, traders, that tipping point? Are they viewing silver more as the industrial metal or more as the precious metal? So should the retail investor be watching the gold market for triggers to the silver, or they should be looking at the industrial, maybe the copper market for triggers to silver?
I would say still it's gold, because all markets move at the margin, and the industrial demand is pretty clear cut. In other words, you have an input that you're really pretty certain of it. You're certain of it this year. You're certain of the increase next year. You're pretty certain of the increase the following year. But what you're not certain of is what will be the financial or monetary demand. And that's where anything can happen. I mean, if you go to a bunch of bank failures again, and you have a big movement of gold, probably push gold up further, but silver would go along with it. So the story's far from over on silver, and it doesn't take much. One thing I like to point out in all these interviews lately is how much money's sitting on the sidelines. And it's something around $5 trillion. And $5 trillion is a big number. If you take 1% of 5 trillion, you get 50 billion. 1%. If 1% of that money went into the silver market, and I think under higher distress with the monetary system, currency crisis, the war effort, and everything else that's going on, that seeing 1% of that money come into silver is not a stretch. But 50 billion ounces, Michael, is 2 years total silver supply, mined and recycled. The total silver supply is roughly, round numbers, 1 billion ounces. At $25 an ounce, that's 25 billion. 25 times 2 is 50 billion. That's 1% of the money sitting on the sidelines. So I don't think the silver story is over by a long shot. I think that once we get through probably the 30 level, depending on how the derivatives market, vis-a-vis primarily the COMEX and the LBMA, and the over-the-counter market that no one sees, it's not transparent, there could be a real interesting move as far as what could take place with not only silver deliveries, but the amount of paper that's being pushed in the silver market and has been for decades, where perhaps someone cannot meet their commitment, just like in the nickel market, and all of a sudden we have all hell breaks. Now, I'm not predicting that, but it's set up where it's more likely than not for something like that to occur.
Well, if you have market imbalances, eventually something ends up breaking, and just like we did see in the nickel market, it can create eye-popping price changes on both the up and the downside of things. So depending on which way the crisis breaks. But you've kind of sort of answered this next question, but I'm going to ask it anyways. We talk about silver in terms of relations, so we're talking precious metals. It's always the silver gold ratio. And industrial, it's always the silver copper ratio. Which of these ratios should be more important to an investor to be following, or is it both?
Well, I think it's both, because you can, especially if you're trading, which I have not done as much the last couple of years as I used to, because I didn't see the setups I wanted. But regardless, I used to keep about 75% core position. I wouldn't trade. And then I would have up to 25% where I'd try to capture what I call, swing trades. I mean, talking months. I'm not interested in trading it for a couple of days, but if the trade was put on correctly and it only lasted a couple of days and the stop came up, then of course you do what the market tells you to. But I mean, like this rally we just talked about from 23 to 25, $2, that's a pretty good move percentage wise. You're looking at about 10% in a leveraged commodity if you're using the futures market. It's not saying you should or shouldn't, but you get the idea. So I think if you looked at it as where it's showing you, the market's telling you I'm an industrial metal, when that's the time to maybe stay out of a trade or maybe accumulate. And when it's telling you I'm a monetary metal, that's the time to go ahead and look to get it more aggressive on a trade. So I think you could actually use it. In fact, you might be able to build an algorithm around it where it wouldn't be just those two inputs, but that could be an input weighted properly for an overall algorithm. And I hadn't thought of that until now, but it's a very good idea. And I think, being objective as I am, you could use them both.
Yeah, it's always kind of a schizophrenic metal, isn't it?
Well, it's Roy S. Jastrom, one of the, in my view, better intellects when it comes to analyzing gold and silver. His second book, or not a second, his book on silver is called Silver, the Restless Metal. And I thought, yep, he got that right.
Definitely. So for the listeners that are out there, you and I are going to be in Las Vegas together at the end of September, on the 29th of September to October 1st at Caesar's Palace for the Silver Symposium put on by Stock Pulse. You'll get more conversations like this from David and myself. And if you want to follow David's work directly, how would they do so, David?
I just go to the main page of themorganreport.com. We've got a free service, a paid service. I do consultations. So there's a lot there. I've got, over 40 years in the resource sector, looking primarily at the precious metals, but I've covered every natural resource out there, and almost anything on the periodic table that you can invest in, we've covered in the Morgan Report over the last 25 years.
Perfect. And on social media?
Main one's our Twitter feed. It's at Silver Guru 22. There's a check mark. If you don't see the check mark, you're on the wrong one. I'm scammed a lot on Twitter doing crypto stuff, which I don't do much. And then if you want to see it all, just go to the morganreport.com, hit the blog tab. On the blog tab, right-hand side's all the links to, Facebook and LinkedIn and our YouTube channel and probably a couple other things. So
perfect. I look forward to chatting with you again before the big event in Powwow in Vegas. And thanks for jumping on here as we watch this market rally through the summer.
Well, thank you, Michael. It's a pleasure speaking with you.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.